Hi everyone, let's go over my cycle, macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the cycle bullish scenario where we're looking for multiple 1-2s to the upside, now looking for a bull market in the blue wave 1, then a bear market in the blue wave 2, before then continuation to the upside. To get a better idea of the top for this wave 1 in time, we have to compare the previous wave 1s with one another. The yellow wave 1 was a little bit shorter in time than the red wave 1, as it is just shy of hitting the 0.786, and the green wave 1 is exactly the same amount of time as the yellow wave 1. So if we then take a trend-based fib extension from the low to the high here to the low to compare the green wave 1 with the blue wave 1, toggle on the 1 and the 786 taken from the previous ones over here, and for a little bit of leeway, the 0.618, we get a time target between September 24, March 25 and October 2025. If we then look at the price for this potential wave 1 to top out, we again have to compare the different wave 1s. The yellow wave 1 is a bit shorter than the red wave 1 on the logarithmic scale, just shy of hitting the 0.618, and the green wave 1 is also shorter than the yellow wave 1, hitting the 0.618. So with that in mind, we can have a potential target for this wave 1. Of course, the 0.618 is on the chart, as well as the 786 for a bit of leeway, giving us a target between 100k and 180k. If we then zoom in to this structure over here and go to the macro bullish scenario, then this is the scenario that we're looking for. 1, 2, 3, 4, 5 to the upside, finishing that green 1, WXYXZ to the downside in 2, and then continuation. Now recently I got a question from a viewer as well as a member that asked, hey Koen, how would you count this move to the downside in the bullish scenario as a WXYXZ? What would be the fibs and what would be the count? So over here I have this count on my chart for you. WXYXZ, triple zigzag to the downside, which is a rare structure, right? Especially on the higher time frames, but this is the way how I would count it. An ABC to the downside, wave B retracing to the 382, common target for a wave B, then a complex double zigzag structure in wave X, another ABC to the downside, once more hitting the 382, another complex move to the upside in a wave X, and then a final ABC to the downside to then finish this wave Z. If we then look at the high time frame bullish scenario here on the daily, then this is the scenario I'm going to keep an eye on. We over here then have a wave 1, 2, looking for 3, then a sideways 4 and a 5 to top around that 50k area, let's say between 48k and 55k, for then the end of a wave 1, retracement to the downside in a 2, before then continuation. I think the probabilities are very low for price to just continue to the upside and completely disregard the volume profile that we have, because in 2021 we have ranged around this area and inside this volume profile for such a long time that I would expect in 2024 to also respect this volume profile range. Therefore, I think it would be very nice to move up eventually to that 49.5k level, but not just continue for all-time highs in the bullish scenario, but actually see a move to the downside to retest the low of this range, which is important support, but also resistance. And since the moment we got inside this value area, we have not retested this value area low and this white box being the support resistance area. Now the common targets for a wave 2 are the 05 to the 786, and it depends on how high this potential wave 1 will go to see how high the fibs will be for this wave 2, but for now the 382 is inside this area. It is a target for a wave 2, just a little less common. If we then look at the bearish cycle scenario, then we are looking for a top over here and a multi-year bear market where we have 5 waves to the upside, finished, and now we're looking for another move to the downside to see lower prices below 15k. In this scenario, the target for this wave 2 would be around the 0.236 or just above. Of course, usually on the lower time frames, it's the 05 to the 786 area, which would be $400 to, let's say, $20. But of course, that is very unrealistic. And on these higher time frames, just like you saw over here as well, or see right now, the 0.236 here is hit, but the 382 isn't. That's just something that happens. So that's why the 236 over here, sitting at 6k, is an important target, or maybe not even reaching the 0.236. Now also here you see two fib times, two vertical lines, the 0.236 and the 382. Preferably a wave 2 ends after the 0.382 fib time, which is sitting at the 1st of September 2025. But just to be sure, I also put the 0.236 on the chart, usually the minimum Fibonacci level over here, and this was sitting on April 2024. If we then zoom in to this structure over here on the macro chart, we go to the weekly time frame, still on the logarithmic chart as well, then the bearish scenario is this one over here. Here we are looking for a three-wave structure to the downside after a top is made in wave 1, looking for that multi-year bear market to the downside in a wave 2. Important here is this wave B, as we are looking then for an ABC instead of a WXYXZ down. We are now looking for a 5-wave impulsive structure, 3-wave corrective move, and then another move down. The target area for B, at least the most resistance, is over here between the golden pocket and the 786. The 786 is in nice confluence with the value area high at around 50k, and the golden pocket, which we have passed and are now ranging on top of, was around that 38k, 39k area. The 886 is also still a target for wave B, but we have to wait and see if price can make it. Let's first observe the reaction at potentially 50k if price can get there, because in this scenario we are looking for a move to the downside in a wave C, preferably then a nice strong impulsive structure where important support is sitting between 11k and 8k. This is the golden pocket taken from the low here to the all-time high, including as well the value area high of this multi-year volume profile at 9k. So this is incredible support for Bitcoin around that 10k area, right? And after wave C, we then expect a continuation to the upside. If we look at the daily scenario, the high time frame bearish scenario, then we have to look for a 3-wave structure to the upside, and then a wave A, B, and a wave C. Common target for wave B is the 382, taken from the low to the high of A, which is a less common target for wave 2. So it does increase the probabilities a little bit that this move to the upside is a potential wave C. Most common target area for C is between 40.4k and the 1.236 at 44.1k, but as we know, also based on the lower time frames, the 1.618 is still a pretty common target area, which is at 50.1k, so it is a target area that I keep in mind. What do you see, however, when I put the chart on the logarithmic scale, is that the targets move to the upside, and on the daily you can sometimes use both the linear scale as well as the logarithmic scale. And I do think this is important, because if price moves to the upside towards 50k to 59k, there is still the potential we are in a wave C and then get a continuation to the downside for a continuation of the bear market, basically below 15k. What I don't really like, however, about the logarithmic scale here is that wave B did not touch the 0.382, and a wave B not hitting the 382 is also not common / rare, especially also if we think about a potential impulse in a bull market on a logarithmic scale. A wave 2 not even hitting the 382 is very rare, so preferably I follow the linear scale here, with the target being the 1.618, the max target around 50.1k. So if we then look at the probability of the different scenarios, then on the cycle and the macro, we are still looking here locally as well for higher prices to come. Even if price continues ranging here for a while, that's fine, but currently locally probabilities are higher to still take this high. So we continue to observe what price does between 40 and 50k, especially if price continues to move to the upside towards that 50k area. And when we look at the high time frame, the daily time frame, then currently, because of that 382 bounce over here, which is common for a wave B but less common for a wave 2, generally from an Elliott Wave point of view, the probabilities then have to be slightly towards the wave C area, and then a wave A, B, and a wave C. But of course, we continue to see what happens with the daily updates that I make covering the lower time frames, and only when we see local strong weakness will we think about potentially a move towards the downside. And at the moment, that is not yet the case. But hey, we will see next week, 7 p.m. on Sunday, when we have a new cycle, macro, and high time frame update where we are at that moment. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.